Us exclusively to talk through the quarter is BigCommerce CEO Brent Bellem. Brent, good morning to you. And I should note that your shares are still trading above 85 bucks. You IPO'd at $24 a share. So even with a 20% drop this week, you guys are still sitting quite pretty. But I have to note that not long ago, you guys were trading at a similar valuation as larger rival Shopify. Does that make you nervous at all? Can you deliver on those expectations? How do you get there?
Well, we deliver by serving our customers, and that's the way we make shareholders happy over time, by delivering the best e-commerce software platform in the world so businesses can create beautiful and successful e-commerce stores.
You know, I was wondering, why have PayPal and Square, two big players in payments, missed out on e-commerce as a service trend? You were an executive at PayPal, and this is something that Square has begun working on, but I just wonder why they didn't fill this space, why it's been left to you and Shopify and a few others.
Well, they're payment processors, and they are two of our biggest and best partners in processing payments. They get that same payment volume by serving our joint customers. And so I don't think they're missing out at all. I think they're thriving in partnership with us.
But they've gone into this, they've gone into different spaces, loans, Square Capital, beyond just payments. Do you worry that one day they could become a competitor to you?
Well, I note I was also at eBay, which owned PayPal, for almost 10 years. And for a long stretch of time, both eBay and Amazon attempted to build and serve their own e-commerce platforms. That's not their core business, though. And they ultimately both abandoned that area, deciding that they just couldn't keep up with specialists like us. And I think PayPal and Stripe probably realize the same thing. They're better off partnering with BigCommerce than they are trying to compete against us.
Brent, what's your argument that it's BigCommerce and Shopify, not BigCommerce versus Shopify?
BigCommerce best serves a very different company than does Shopify. We have an open SaaS platform, and that makes our software far more flexible and adaptable for established businesses, large businesses, B2B sellers, global sellers. They're much better at serving a startup that basically molds their business to a closed SaaS model. We're an open SaaS model, and we're the best platform in the world, we believe, for established and complex businesses.
There are, though, some pretty big brands that use Shopify. I understand where you're coming from there, but can you talk about your roadmap then and how you intend to even further differentiate in your capabilities versus what a platform like BrandX can do?
Yeah, absolutely. We only have one product, and it's our core e-commerce platform. 100% of our product and engineering investment goes into that. All of our mind share is focused on delivering the world's best open SaaS platform. They're a software conglomerate. They have 10 different categories and industries they're trying to compete in against companies who have been doing those other things far longer than they have. So their attention is divided. Ours is focused. And I would note that in the first half, we reported adding stores from 9 of the Forbes Global 2000 largest companies. So we're doing exceptionally well serving the world's biggest companies in addition to mid-market and small business.
Brent, to that, I would go back to the argument I made earlier in this show. They may be diversified, some of these bigger firms, but if they start to narrow in on your field, that could potentially provide a problem. But my last question for you more is around your stock price. Now that it's trading at more than 3 times your IPO price, do you regret at all not raising more money, particularly when you're in such a competitive field?
Well, it'd be nicer to raise money at the current stock price than what we debuted at. We're delighted with the investor reception to how we've done. But really, the future is what we're focused on. The earnings we reported yesterday were our fastest revenue growth in the last 12 quarters. We're in our 3rd straight year of accelerating revenue growth. That's an unusual story. And if we can keep these types of trends going, then hopefully shareholders will be very happy over time.